Hello everyone, and welcome back to the Mortgage Rundown. Today we're going to talk once again about what's happening with interest rates. The 10-year Treasury is floating right around 2.9%, up 50 basis points on the year. With Jerome Powell now at the helm of the Federal Reserve, it's important to look at what are his thoughts on the economy and interest rates. This week, he appeared very optimistic about the economy and the possibility that the FOMC raises rates 3 and possibly 4 times this year. His reasoning is continued strength in the labor market, some evidence of rising inflation, continued strength in the global economy, and recent stimulative fiscal policies such as tax reform. Getting back on the inflation front, take a look at the following graph. This shows the Fed's preferred inflation measurement, PCE, on an annualized basis. As you can see, inflation is starting to move higher, but whether or not it reaches the Fed's target of 2% is still unknown. Speaking of unknowns, the impact of Republican tax bill will be difficult to measure for a few months at least. There is a presumption that it will raise the economy and the inflation with it. The Fed's expectation is rising inflation will continue, and that will lead to more interest rate increases. It's safe to say that 3 interest rate increases are fairly certain, and if inflation continues to climb, then 4 increases is a good probability. In terms of Treasury rates, the 10-year is still holding below 3%, but the more interesting move is on the 2-year Treasury, which continues to rise. The graph on your screen shows both the 2-year and the 10-year Treasury rising, but the 2-year Treasury is rising faster and closing the gap. Even though mortgage rates are more closely tied to the 10-year, the rapidly rising 2-year does put upward pressure on mortgage rates. The reason the 2-year continues to rise faster is the expectation that the Fed will continue to increase short-term rates. In fact, the market prices in a 100% chance the Fed raises rates on March 21st versus 68% at year-end. The probability of 3 increases in 2018 is 72% and 4 increases is 34%. In the coming weeks, you should keep an eye on the following items. Will the prospects of 4 interest rate increases push the 10-year over 3%? Inflation data and specifically core PCE, will it continue to move higher? And any further comments from Jerome Powell as the market becomes more familiar with the new Fed chair? If you'd like a more in-depth analysis, please visit our blog. Thanks for watching and have a great day.